You are very, very welcome, Ronnie. It's a privilege to be here with all of you. I myself live in the Denver area. It's amazing what the internet can do. I'm not even on the telephone right now. I'm speaking into the microphone via GoToWebinar here at my office here, and I'm very happy to be speaking to you about precious metals. I'm going to talk about myself in this presentation. I'm going to talk about the bullion market. I'm going to talk about the financial markets. And Ronnie will ask me some questions afterward, and also you'll have the ability to ask me questions in several ways. You'll see at the top right of your screen there's 4 buttons. One of them looks like a hand with an arrow, a yellow hand with a green arrow. That's the raised hand. And if you have a question that you would like to ask me verbally, just hit the raise hand, and when I'm done, I'll actually unmute you and you can ask it. Otherwise, you can go in the chat, which is just under there. It says questions chat, and type in a question. I will see it and I can respond to it. And of course, Ronnie has some questions as well. Okay, so on that note, again, I'm recording it, so don't say your names. Otherwise, there's no other rules. And I think you'll really enjoy this presentation. This is what Andy Scheckman, our president, and myself typically give. I will give it all myself. I'm going to, keep the presentation time down to 30 or 40 minutes, just so we can ask as many questions as possible. And I realize you have your weekend ahead of you. So on that note, let me go. I don't need a disclaimer to discuss it, of course. Just want to talk to you. First, I'd like people to understand, who we are that are speaking, both our firm and myself. Miles Franklin has been one of the largest bullion dealers in the United States for about 24 years, as you can see on the top bullet point. It was started by David Scheckman in 1990. His son, Andy Scheckman, who's now our president, joined a year later. Actually, David right now still writes the blog, but he's not really involved in operations anymore because he's semi-retired. But anyone who reads our daily blog know that he's just as passionate and diligent about writing as I am. Our brokers, as you can see, have been around for a very long time. It's kind of like the oil industry where you had such a long depression during the 80s and 90s that, all the brokers that are there, just like the experienced oil workers, are all very old. So we have extremely experienced brokers. They know what they're talking about. If you were buying from us, you'll see in the 4th bullet that we may be the only broker that does not charge a commission if you sell back to us, meaning if you're a client and you buy from us and then you say, I need to sell back to you, we don't charge a commission. I'm going to talk about our bullion storage facilities and also, our free daily newsletters, which some of you are obviously aware of. You can see that we're recommended by many of the big names in our business because of our reputation, and that's, we're an unregulated business, yet we have an A+ rating after 24 years, not a single registered complaint, because we do things fairly. Our business model, I think it comes across in the way our blogs come across. We care about people, and we just want to, treat them fairly and help them protect themselves. Just so you get an idea of me, and there's that handsome picture up in the top right. I finally got a picture with a tie a few months ago because I've been using my old sweater picture for the last 5+ years. So you know who I am. I spent well more than 15 years on Wall Street. If you include what I do now, it's close to 25 years. I'm from New York. I'm a CFA. I worked in all the major Wall Street firms. As you can see, they even put in the right what a lot of them turned into. I kind of emphasize that to show that pretty much everywhere I went with Wall Street was scandalized, whether it was Merrill Lynch, which became Bank of America, and Shearson Lehman Brothers, and then I worked at a bunch of firms that became Wachovia, and of course the most time I spent was at Solomon Smith Barney, a division of Citigroup, where I was an oil field service analyst, actually a highly ranked oil field service analyst for 6 years. I left in 2005, never to return. I was so scandalized or so disgusted by the scandals on Wall Street. And I've since then been in the precious metals business. I've actually, since 2002, been fully invested in the sector. But really, since 2005 is when I left Wall Street. I've been writing free missives, and it's still free to this day since, I don't know, 2003 or 2004. Bill Murphy of GATA coined my name, Ranting Andy, a few years back, and I've gone with it. I also spent more than 5 years as an investor relations officer or consultant to literally dozens of junior mining companies. So I have a very, very strong understanding of the business itself, of the bullion business, and of course of Wall Street. For those of you who are reading our blogs or are thinking about it, we also have Bill Holter writes every day for us. I've known him for 10 years because he too was writing for GATA. That's where I met him when we were writing there, also for free. He's one of the best writers in the business. He was also a Wall Street guy who left because he was disgusted by it, and he's been with us writing full-time for the past year. So typically, this presentation, as I said, is done jointly by myself and Andy Sheckman, the president of Miles Franklin. Andy and I are practically twins. You wouldn't believe the similarities. We're the exact same age. We have the same name. Our fathers have the same name. We have the same similar, whether it's skiing or golf, etc. He's one of the best people I know, and he's also, in my mind, the most knowledgeable and charismatic of the precious metals bullion dealer officers out there. He might be the only person out there that actually can speak about the bullion industry the way that I speak of the bullion markets. And we always start with this slide because it's so relevant to what we're seeing right now. He's been saying it for years, but it's clearly the most important factor in our business is the fact that there's not enough supply out there. It started really in 2008 when every mint on the planet was sold out while the cartel was attacking the paper price. Premiums for silver alone were up, close to 100%, if you could believe that. So for anyone who owned SLV back then, they were thinking, "My God, I'm down 50% on my investment." But for people who own real silver, they're going, actually, it didn't go down much at all. I mean, we depleted pretty much every silver ounce for 4 to 8 or even 12 to 14 weeks back then. And even gold was trading at 20 to 30% premiums for a time. And as anyone who owns, and you're stackers, so obviously you own some, you realize that we've had similar issues several times since 2008, not even during crises. We had in 2011 when silver went to $50 an ounce, the entire industry sold out for several weeks, and that was on the upside. Then again, we had this January when the U.S. Mint sold out because of record demand, and of course what we saw, what I call the alternative currencies destruction in April, when premiums jumped to 30% across the board, including for junk silver, which they call it junk because it never trades at premiums, but it certainly did this time around. And although premiums have come off somewhat, they are still elevated compared to levels. So it's the whole point of you should not think in terms of how much money worth of silver and gold you own, but how many ounces you own, because the next crisis could be the one where we run out permanently. And by the way, for people who didn't realize, the French government just this past week announced that you can no longer buy gold and silver through the mail, unless, of course, you get a permit from the French government, which no one's going to get. So for people in France, they're already realizing they should have bought the silver. And we just found out just yesterday that the Indian government is now trying to, actually not trying to, they are banning the sale of bullion coin, gold bullion coins at banks. So there's going to be a lot of Indian people who happen to love gold who realize I should have bought more because I may not be able to get it. And here's some of the facts that prove me out. I mean, April, while they were attacking the paper price, was not only the largest, the biggest month ever for Gold Eagle sales at the U.S. Mint. It was by a large amount. And look what the number 2 month was. It was January of this year. When you talk about silver, it's even more extreme. And I talked earlier about January, where they shut the mint down for 12 days. I mean, that number just blew away any number we've ever seen. But more importantly, look at the red numbers. The first 5 months of this year, January, February, March, April, May, were 5 of the 10 or 12 largest months ever. So we are talking about massive physical demand while they're trying to convince you that the paper price is going down. In this presentation, the main thing I can tell you, the main thing I can get across to you, and I think a lot of you probably know already, is that you should think of physical gold and silver as real money. That's what they are. They are not investments. Of course, if you buy them knowing that you're going to need to sell them in the near future for medical expense, or you have a college tuition to pay or something like that, yes, they become investments, just like SLV. But for most people, it's just like when you own it, it's like putting your money in the bank. For years, until now, when people are scared of banks because they don't pay anything and they go bankrupt, and like in Cyprus, they'll steal your money. You put your money in the bank because it's safe. But, and you don't worry about whether it goes up or down. It's just your savings. And that's how you should think about physical gold and silver, because as long as you're thinking of it that way, it just sits there, and over time, it overcomes cartels, and there's been many of them, and retains its purchasing power. And as you know, obviously, all the fiat currencies around the world are losing their purchasing power rapidly. Look at all these money printing schemes. Look at Japan. This is a first world country. The yen has fallen 25% in 4 months, and they're an import-dependent economy. So basically, they've just had 25% inflation for everything over the last few months, and we've seen the announcements. Apple just raised their prices 20%. McDonald's raised their price 20%. Of course, gasoline prices are up 20%. They already have their energy issues over there because of Fukushima, so they're not using the nuclear as much. So, I mean, that's unabashed hyperinflation starting over there, let alone the actual hyperinflations that we're seeing in Argentina, Venezuela, and where we're going to see across the board. And I do strongly believe that the attention is going to eventually get back to the United States with our debt ceiling, our fiscal cliff. You guys realize that in the past month, as the 10-year Treasury yield went from 1.6 to 2.1%, that measly 0.5% has increased the U.S. budget deficit by $85 billion this year because of the increased debt service costs. That fiscal cliff deal, the so-called sequester, is $85 billion of cuts. So just in the past month, the entire spending cuts that were achieved by that sequester have been eliminated by a measly 0.5% increase in interest rates. And of course, interest rates will go far higher in the future unless the Fed decides to do 5, 6, 7, 8, 9, which they will. And of course, in April we had the alternative currencies destruction. Today was kind of a little, addition to it with this ridiculous attack on a day where it was a really crappy unemployment number. But again, we are seeing major dislocations worldwide in the paper and physical markets. And believe me, every market is different. In some markets in the world, you can't even buy physical gold and silver right now. And in some places, you just have elevated premiums. And eventually, the whole thing will come apart because, heck, look at the comps where the inventory is collapsing at the same time that the major players, the JP Morgans of the world, are covering their shorts aggressively. And we've never seen them go net long, and they're getting pretty close. So I'll talk about some of the markets today in general, about inflation, how to protect yourselves. I won't spend as much time on the products because of time constraints, but they are here, and I can always answer them. The dangers of paper PM investments, as I call them, and some of our storage options. Okay, well, here's the prices of the last decade or so for the precious metals. Of course, you see at the right those steep drops in gold and silver. That's what they've done this month. There is no relation at all to what's going on this month in the fundamentals. This is called the end game of a terrified powers that be, given that everything that they've done to jumpstart economies has failed. We are seeing inflation everywhere. We're seeing money printing, and as a result, they are in the midst of something I've never seen before. But again, for silver, the cost of production is around $30 per ounce now. For gold, for most mines, it's definitely above the current price. Even the best mines in the world, we're under the new guidelines that the mining companies are reporting, this all-in cost. Even the best mines in the world were pretty close to their break-even point. So, the silver and gold supply is going to fall dramatically from this point. They don't get the prices up quickly. All right, here's our Dow Jones propaganda average, and it's one of my best rants, so you should Google it, showing how they do the same thing pretty much every day. Here's how it's done in the past 15 years, only recently be actually going above the level of where it was 15 years ago. But on a nominal basis, it's not that much higher. Of course, if you include the survivor bias of the fact 4 of the 30 components have been deleted because of bankruptcy or reorganization, that's at the bottom, Citigroup, AIG, GM, and Eastman Kodak, the price would probably be 10% or more lower. So even in nominal terms, the Dow, for all the hype about it, hasn't done anything. Of course, if you look at inflation, it's down dramatically. Here's using the published CPI. I mean, we know that the CPI, or I'm not sure how far your group follows the U.S. CPI, but we have things, as you see on the bottom, called substitutions and hedonic adjustments. they pretty much have done everything imaginable in the past 15 years to reduce the CPI growth so that they don't have to, well, A, they don't want to scare people, and B, they don't want to have to pay more money in entitlements, which is, they're all linked to the CPI. But just based on their CPI, the Dow is down close to 25%. And for those of you who know John Williams' Shadow Stats, he is the preeminent expert in taking apart government statistics and comparing them to the reality, which is, for instance, the blue and the red lines in the left chart show the difference between what the government reports as CPI and what he projects. And he projects that over the past decade we've been, 8 to 10% annual inflation, which, trust me, from my life, that's what inflation is compared to the 2 or 3% the government reports. And if you use those numbers, look at the right graph, the Dow is down close to 70% in real terms over the past 15 years or so. And in the bottom right in red, I'm saying, and what if the President's Working Group on Financial Markets wasn't supporting the Dow every day? And again, if you go to Dow Jones Propaganda Average, this is exactly what I talk about. They use the same algorithm. Here are 4 days in January where they use the same algorithm 4 days in a row. And I would say, and based on my research, it's, I don't know, I'd say 60 to 70% of all trading days are this or close to it. That's just the algorithms, the same as you see on the comics, which I'll show you in a second. What I'm here to do is to educate. I mean, I have my job at Miles Franklin, but I've been writing about these things for years. I'm trying to help people understand, the reality of the world. The most important slide in this entire presentation, if I were to go through all the 50 of them here, is this one, because the definition of money is what people don't understand. There is an actual definition, 1, 2, and 3. There's actually 6 parts of those 3 tabs there. And the only 2 that the United States dollar has, or for that matter, the Australian dollar, the euro, you name it, is that they are divisible and fungible. Yes, you can make change of a dollar, and yes, all dollars are equal. Although in recent months, we've made several versions of the dollar with different pictures on it, and a lot of countries, Canada is one of them, are not accepting them because they're not quite sure if one dollar is equal to the other. But those are the least important parts. The yellow parts are what makes something actual money. It has to be verifiable. You have to know how many are outstanding. We don't have a clue how many are outstanding. We just learned last year that the Federal Reserve printed $16 trillion during the crisis in 2008 to 2010, just handing it out to everybody in sight, from Toyota to McDonald's to Goldman Sachs. Yes, Toyota and McDonald's were given money during the bailouts, but we didn't know about these. So who has any idea how many dollars are outstanding? And of course, we know that they're not limited in supply because they're creating them every day. They have QE3, QE4, soon they'll be QE5 and 6. They have to be a medium of exchange. And for all the excitement about the dollar and how it's king dollar, the only place you can really use a dollar is in the United States. You can go across the border to Canada, and it's almost parity. It's about 0.98 to the dollar, and still they won't take them because they're not quite sure exactly what the exchange rate is. Plus, as I said, some of them don't even trust those $100 bills. So it's not a true medium of exchange, and you certainly couldn't go, to various continents around the world. You couldn't go to Africa. You probably couldn't even go to Australia and spend $1 there without spending the 10 or 15% premium commissions to exchange it into Australian dollars. And most importantly, it has to be a store of value, which the dollar, the euro, the Australian dollar, you name it, certainly has not been over time. I mean, the top left chart says it all. Federal Reserve came into being in 1913. That's what's happened to it. And believe me, that will go to zero because there's been 599 paper currencies in the history of the world, and all 599 failed, or should I say, almost all of them failed. The only ones that did not fail were the ones who were conquered by another country. So the only way to maintain your purchasing power is to be conquered, and that's the upside of having paper currency. Here are some other measures here. The Dow Gold ratio, it's gone down to 1 in the 1930s. It went there in 1980. It almost got there recently. It will be there again. I think it'll go much lower than 1, but it remains to be seen when and how much. And then there's some other measures, of course. For all the excitement about the dollar, people take a look at the right side of the upper right graph. You'll see that the dollar index hasn't really changed much in the last 7 or 8 years, even 9 years. And again, that's because it's mostly the euro. And what I don't know how badly that speaks of the dollar. The fact that with the euro collapsing, it's still gone up against the dollar over the past 10 years. I'm here to dispel myths. Probably some of you have heard all of them, but believe me, when you're in my position writing about this to an audience of tens of thousands and people get angry sometimes, or they're just ignorant, they will actually say these things. You know, the gold is a barbarous relic is the most famous of all. That came from John Maynard Keynes. He is the father of Keynesian and an idol to Greenspan and Bernanke and all the central bankers of the world. Basically, Keynesianism means that the government knows best, whether it's monetary policy or fiscal policy, that the government should be able to manage economies. And as we know, they miserably fail every single time. People actually tell me you can't buy groceries with gold as if you could buy them with stocks and bonds. They'll tell me you can't eat gold. I mean, I've actually heard that, and that it's a worthless piece of rock, even though it has a value of $1,400 per ounce, but somehow it's a worthless piece of rock. And by the way, as I said, it costs $1,400 an ounce to get that out of the ground. So, but again, there's a lot of ignorance out there. I believe that only 1 or 2% of the world actually gets the concept of real money or has an interest in getting it. And if I can get it up to 3% before the whole thing ends, I'll be very happy. And then, of course, there's all the lies out there, hence the name of this presentation, that gold doesn't keep up with commodity prices. And again, remember, other commodities are not manipulated, and still gold and silver have outperformed them, notwithstanding what we've seen in the last few months, given what I've been talking about, this big smash here. You know, this is the funny one. This is the only one. Maybe it's not so much a lie. I mean, if you look at what the monetary aggregates that are out there, the M2 in the United States, gold has in fact kept up with it. But again, we don't print M3 anymore. Back in 2006, just when Bernanke came in office, we discontinued publication of M3, which is the broadest measure of money supply. If you can believe this, the explanation was that it cost $1.5 million a year of administrative expenses, so we no longer kept it. We keep all these other things, but that one we will no longer keep for $1.5 million. And per what I said before, I think if we had, let's call it a quote M4 that had a real number, I think that number would be, it could be twice as much as M3. It's such a big number. And of course, people will say, well, it's so hard to buy gold and silver, and obviously people in this group know that that's not true. There are many ways of doing it. You can buy funds, although people who read me know that I'm very much against them, and I have been even more so against them in recent months because I think that they are targeted by the cartel to make sure they trade at discounts so that people like Eric Sprott cannot do offerings that cause major physical purchases. And of course, it's easy to store as well. We do it, and many others do as well. And anyone who reads me knows that I use the term paper PM investments to refer to anything that's not physical gold, whether it's a mining stock, whether it's Central Fund of Canada, or God forbid GLD and SLV, or I can say a Perth certificate, or any of those certificates that say you own something that's owned by something else. If you own it, you don't own the real thing. And particularly GLD and SLV, as you can see here, there are so many loopholes in their prospectus. It's just embarrassing. I mean, the gold and silver is never audited. It can be leased out. There's no prohibition against it. They can send it to sub custodians that do not have to be audited as well. And of course, it can be force majeured by the government, and there's nothing you can do about it. And to top it off, the custodians are HSBC for GLD and JP Morgan for SLV, who are the biggest shorts out there in the paper market. And that's why it's trade discounts right now of 3 to 4%. Here's GLD, here's SLV. And one day, this is what's going to happen to them. This is the U.S. Oil Fund, which was initially came out on par to the WTI oil price here in the States, and now it trades at a 65% discount. And ultimately, I think that's going to happen with GLD and the SLV when people realize they don't have the gold and silver they claim to have. Okay, and of course, I'm here to make sure you understand, the pros and cons of gold and silver. For this group, I'm not going to spend a lot of time on it, but, for those watching on the internet, you own it yourself. I mean, if you own money in a bank, Do you consider that more safe than owning physical gold and silver hidden in your house or in a safe storage facility? If you're in a bank, A, it pays you nothing. B, inflation eats it away. C, banks go under, as we found in 2008. And D, because of what we saw in Cyprus, you could have your money expropriated, or I should say, or confiscated. So, you know, for cons, yeah, I mean, it does cause space. It takes up space. You have to be scared that someone will come and get it. But the fact is, if it's sitting in your house and you don't tell anyone about it, and you have it in a safe, and you have a gun, an alarm, and a dog, it's a lot safer than in a bank. Okay, yeah, purchase options. You have these funds. I used to love those funds. I'm close friends with the people that run them, but I several months ago wrote a piece about how I think that they're under attack. Yes, the gold and silver are there, but they now trade at discounts, and they could trade at big discounts for all I know, because you will never get that gold and silver, even if it's there, which it is. And you have face all of the paper market issues. I mean, they can close exchanges, you don't get it. They can raise the taxes on it to, you know, the capital gains taxes on these things to 70, 80%. I mean, what's the point of owning this stuff? It's just too risky for me. You know, for purchase options, there's many ways of buying it. You can go to a bullion dealer like us. We have every product out there because we work with the mints, we work with the major distributors out there, and we give you personal service, and we can help you with storage. If you go to a coin shop, that's great for certain things. If you want to do something in a hurry or in small amounts, that's great, but they're going to have very small inventories, and they're going to charge high premiums. And then, of course, there's online, which is good for some things too, but you have to be very careful who you deal with. There have been many scams online, and there are lots of counterparty risks. So, again, you know, the point is that you can buy it in many different ways. You just have to do your due diligence because it's an unregulated business. As for the markets in general, I mean, I'll go through this quickly. Almost all of the gold that you buy, the physical gold, is going to be government minted. Frankly, just because of the cost, there's just not a lot of private mints that can deal with the working capital of buying gold and selling it. So you can basically have the 5 major mints of the world, the U.S., Canada, Australia, Austria, and South Africa are going to be the great majority of all the coins out there. And in normal conditions, the premiums aren't that high, but you know, since what we saw in April, they have been elevated, you know, somewhat more so in silver. But the fact is that you have seen movements in premiums, and if we have further attacks on the paper price, we could see what we saw in 2008, where the gold premium soared. So it's basically, it's a highly unfragmented market. It's these government mints. Here are the major coins out there. There's numismatics. It's a very small part of the market. We are very, very, at Miles Franklin, careful in how we talk to people about numismatics. Personally, I think of them more like baseball cards than anything else. I don't believe for a second that that they have some kind of protection against confiscation just because in 1933 they did. I mean, this is a different world here. The only people who should be buying numismatics are people who are collectors, and occasionally we have seen the premiums fall as low as the regular bullion coins, at which point we tell people to buy hand over fist. But you know, there's only so much supply out there, and it's very rare that that happens. So I would generally say to most people to avoid numismatics altogether. For IRAs, anyone who reads me knows that I and Andy Scheckman cashed out our IRAs 3 years ago when we were 39 years old and paid the taxes and penalties happily. I recommend to anyone to get out of the system, whether it's the U.S. system, the European system, the Australian system, you name it. But for those people who do want to have IRAs with precious metals in them, we do offer several options. Most coins are available, not all, but most. Here are some that are. The same will go for silver as well. Silver also, silver, unlike gold, it's not so much an unfragmented market. Probably only half of the market are the famous coins like these, the Silver Eagle, Maple, etc. There's a lot of other coins out there, generics, because again, it's cheaper to mint per se. And here are some of the more popular ones. I personally think that some generic rounds are very useful in a portfolio of physical gold and silver. I myself have a lot of silver buffalo rounds because they trade at lower premiums and they're well known. But again, you know, you need to start your portfolio with the most widely known coins. So I think everyone should own the maples and the eagles and the Australians and the Austrians and the coins, just because people know about them. But again, there are some good quality products out there in the generic world. There's also some ours as well, though we recommend that no one should really buy anything. Frankly, I own nothing more than a 1 ounce coin, and certainly I would say 10 ounces is as much as you should get, because once you get to the 100 ounce, you're very illiquid. People don't really want them. They're also going to fear that there's going to be some kind of taint, that they be tainted, like they'll be trolled in, and like we saw some of those gold bars that had tungsten in them. So I would stick to the 1 ounces myself, although there is a lot of choice out there. And yes, there is a numismatic market, but given that the price of silver is so much lower than gold, there's not that much value added in it. And again, we don't do much in the numismatics. I wouldn't recommend them. But what I would recommend, per my numerous rants, including one called Must Own Junk Silver, I think junk silver is the most important asset you can own. As you see in the bottom left, I call it the ultimate fear product, because look, these are, especially for Americans, these are actual American coins. They haven't been made since 1964, and they thus will never be made again. They are 90% silver, and they are the smallest denominations you can get there. For instance, a dime, because basically we're talking about pre-65 dimes, quarters, and half dollars. A pre-65 dime right now is worth about close to $3, maybe $2.50. So it's very good for bartering if we're in the worst case scenario. And they typically, up until recently, have traded for low premiums. Right now they're trading at very high premiums. They were up to, back in April, they got to spot plus $7 or $8 an ounce. And even now, when things have settled down, they're still at spot plus $4. So I think everyone needs to own some for the worst case scenario. And again, for the IRAs, you can pretty much put anything in there. If you have any questions, give us a call, but I'm not a big fan of IRAs. There's platinum, of course. Platinum, as you can see in the top bullet, or second bullet, is a very, very small market. Almost all the platinum in the world is produced in either South Africa or Russia, so it has supply issues of its own. We've seen major mine shutdowns in South Africa because of unrest with the miners. So, if you have a big portfolio of physical precious metals, I would say you might want to own a small amount, like no more than 3 or 5% of it. But for the average person, I would say stay away from it. It's never had a history of being money like gold and silver, even though it clearly has a lot of those attributes. So just be wary of it, be careful, and I really wouldn't recommend it for most people. Here's the gold-silver price ratio, which is very important as a flagstick of what the world looks like of precious metals. A guidepost, as I wrote in the first bullet point. Basically, for hundreds of years, the average was about 15 or 16 to 1, which was based on the amount of silver and gold that came out of the earth. Basically, forever, for every ounce of gold mined, you'd produce 16 ounces of silver. So you had a lot of actual monetary standards based on that 16 to 1 average. And even when you didn't, they traded about that ratio. And by the way, as you see in the fourth bullet, silver is depleting dramatically faster than gold right now, to the point where it's really only 9 to 1 coming out of the ground. And of course, all of that silver that comes out of the ground is depleted by industry. So we really are only, we're down to 1 billion and a half ounces of investable silver above ground on the planet, which right now is worth next to nothing. So the fact that since we went off the gold standard in the early 70s and the manipulation began, the average has been 60 to 1, which is about where it is today, shows you how vastly, vastly undervalued silver is. I believe that, personally, that it's going to easily go back to 16 to 1 at some point. For all I know, it'll go back to 5 to 1 because it's so much more scarce than gold, and it's just as useful. And of course, if you, per the last bullet, if you consider the physical versus paper premiums, the actual gold silver ratio is actually lower than that 60 to 1. Here's the spike we've seen recently in the premiums just for the junk silver, and you can compare it to where it was in 2008. Back in 1999, by the way, that was when the Washington Agreement was forged, and gold spiked higher and silver spiked higher, and you could see that was also a major period. And I believe that we're going to see major, major spikes in the physical premiums in the coming months or years until the whole paper system collapses in on itself. And then some other things just that are that you should makes you feel comfortable as you own your physical gold and silver and consider buying. This is the Chinese. The Chinese say that they only have 1,054 tons of gold. I would bet they have 5 times that amount, and they're probably, their goal is to, since they only, even at 5,000 tons, that's only probably 10% of their currency reserves. I think they probably want to get it 30, 40, 50%. So as long as the Western governments led by the United States try to kick the can a few extra miles by attacking the paper price, the Chinese, the Russians, the Arabs, the Indians, many others are going to be buying hand over fist. So I call it the physical put. And then, of course, you have the relationship between the debt and gold. Here's the debt ceiling. You can even call it that, since it's been increased about 50 times in the last 20 years. Here's the perfect relationship until, of course, as you see on the right of the screen, the government has just gone berserk this year. Obviously, with all of the horrors going on in the world of the economic world, whether it's in Japan, whether it's in Europe, whether it's in Australia, whether it's in South America, or even China right now, the money printing has gone absolutely off the charts, and that's why they've been attacking the paper price. But rest assured, over time, the physical gold and silver price will certainly move back up to the debt levels. And you remember the debt ceiling in the United States right now, we just suspended it and put it at 16.8 trillion, and we're already basically there. So we're going to have another debacle at the end of the summer. Right now, they're just taking money from pension funds to give themselves a couple extra months, but it's going to be raised again this year, and I wouldn't be surprised if they get rid of it entirely. Anyone who reads me knows that my probably major forte has been the study of manipulation. Perception manipulation, or as Jim Sinclair calls it, MOPE, is simply about governments believing, well, if we can keep the price of gold down and keep the price of stocks up and try to get bubbles or what they call growth in real estate, that people feel like things are getting better. But the fact is, they're not getting better. Main Street and Wall Street are two different things, and all you do by creating these bubbles is simply increase the debt and the inflation, which everyone around the world is seeing, and it will only get larger. Because another important thing to realize is, if you're talking about a fiat currency system, it is by definition a Ponzi scheme, because it must grow larger to survive. Not only that, it must grow larger, and people must maintain confidence in it. And the confidence is waning, and the size is only growing rapidly right now. Again, gold suppression, GAD is where I really got my start in this area. I started writing for them 10 plus years ago. They're the experts on manipulation. And here's a chart of what the 24 hours of gold trading has looked like over the past 20 years. And if you took out the early 90s and mid 90s, it would look even more stark. 10 o'clock a.m., that is when you have the PM fix. That is literally the minute that physical trading closes for the world. And as you can see, for 20 years, the cartel attacks with a vengeance the second that they can't, that they can use only their paper money. I've talked about 3 o'clock a.m. Well, that's right around the time of the a.m. fix. We're talking about Eastern Standard Time. Recently, the 12 o'clock p.m. has been the cap of last resort. But the amazing thing, the truly amazing thing, is that we've been in a 12-year bull market. And per this chart, gold is actually down in the United States trading hours, on average, net down over a 12-year bull market that has seen gold rise from $250 to as high as $1,900 an ounce. That is your proof positive about manipulation. Although there's many more things that I talk about every day. Here's what I call the 2:15 a.m. That's a rant that I wrote. It's gotten so ridiculous. 2:15 a.m., by the way, is the open of the London pre-market trading session. It's an extremely illiquid paper session where you just can put offers on the screen in the very early morning hours in London. By the way, Chinese trading closes at 3 o'clock a.m., so it kind of coincides with the end of Asian trading as well. And it's gotten so ridiculous since this whole April attack. Here's what we've seen May 13, 14, 15, 16, 17, 21st, 22nd, 24th. We're talking about something like, 15 out of 17 days, including the bottom right is this morning. They have been attacking. They have been capping at 1,400 like I've never seen any price be capped before. I call it the line in the sand. And, whatever is going on is very big. I personally think it has to do with the fact that you're seeing massive covering by JP Morgan and the others on the COMEX. I think that they look like they want to go long because they know it's coming, and as a result, they've been attacking the paper price every single day. By the way, one of the only 2 days that they didn't attack at 2:15 a.m. was what they did on May 20th. You can see the red line over here, where they attacked. They actually attempted a second Sunday night paper silver massacre. They took the price down there $7 an ounce in minutes, just like they did on May 1st, 2011, when they attacked right after silver got to $50 an ounce. We ran out of physical supply. They even had the gall to pretend that that Bin Laden was killed that night when we have no body, as if him getting killed has anything to do with the silver price. Remember, 9/11 was in 2001. This is in 2011. But the point is, they are going all out to attack, and just like they always do in history, they will lose. And again, my last topic is going to be depository storage. It's not for everyone. Per the first bullet, the best option for anyone is going to be to just keep it at home and don't tell anyone. Hide it in a safe behind a wall, get a dog, get an alarm. Don't tell anyone because there's no way anyone's going to find out about it if you're quiet about it. Otherwise, for other people like myself, it makes sense to be a third party, having a third party storage, assuming you do it very carefully, because you have to worry about, some people do worry about theft, transportation, logistics. People like me who are high profile saying that they own gold and silver certainly are candidates, and that's why I don't keep my gold and silver at home. And and we offer multiple options for people, particularly people who are worried about their own governments. And per the last bullet, I'm not sure many people realize that Viamat, which is basically the largest storage operator in the Eastern Hemisphere in Europe, they just kicked out all United States clients. They just said, we're not going to do it anymore because we don't like the United States government's policies about having foreign governments tell them what to do. So you have to be very careful where you're going to do it, and we do have some options. I mean, we do have options in the States. I wouldn't in a million years tell anyone to put it there. I think United States is possibly the single worst jurisdiction to put gold and silver, because ultimately if the Obama administration, whoever comes out after, is around when the dollar collapses, they'll just grab for anything that's out there. Again, Switzerland, because of what I said, it's good for some people. They are becoming increasingly less friendly, and it's very expensive. For some people, Hong Kong might be a good alternative. Personally, I think it's a little too far away from me here in the States because I feel like I may never see it again. But, there are some virtues to putting it there. And, of course, Canada, which I'll talk about in a second. All of our programs, some of them are our own and others are with partners, are fully segregated, which is extremely important, because if it's not yours and it's not held as yours, it's not really yours. Here's our major program. It's our baby at Miles Franklin. It's in BRINKS, Canada's facility. BRINKS is probably the most famous security company on the planet. I've been there several times. I've written several rants about it. I mean, I'm not worried about anyone getting in it. That's not really my issue, but trust me, no one's getting in it. These are good people. It's fully segregated, unlike just about any storage program on the planet. We charge not by the dollar value, but by the ounce. And we have this contract locked in for 2 or 3 years right now, so it's a much better alternative in many ways. We personally, our officers, go every quarter to audit the vault, including independent auditors. I just went for the last vault, the last audit with our independent auditor, which is, I forgot what their name is, but they're one of the largest in the world. And per the last bullet, not only do I have my personal medal there, but so do David and Andy Sheckman, the owners of Miles Franklin. And last but not least, our daily publications. Some of you get them already. We publish 2 free daily newsletters. David Sheckman, our founder, he's been writing for decades. His comes out in the morning, and mine comes out in the afternoon. And, of course, Bill Holter publishes within those blogs 3 to 5 articles a week. You're not going to get better quality and quantity anywhere in this business, and you're going to get it for free. Per the bottom, there's 2 ways of getting it. We can either email it to you, or you can just get it on our website. Last bullet point, my job is working for Miles Franklin. I'm trying to get sales of our products and services, but anyone who knows me and has read me for the past decade knows it's my cause to empower people to protect themselves. And with that, I am going to unmute your host, Ronnie, and he can ask some questions. And then afterward, if you have questions, you can either chat or raise your hand. Ronnie.
Andy, thank you very much. That was a really great talk, and I think we all appreciate your input into the precious metals market. I'd just like to reiterate, people who haven't signed up with Andy, please sign up. The emails I get every morning are really worth reading. Andy, some of the questions I've been sent have been partly answered by your talk, so I'll focus on the ones that haven't. Technical analysis. Many of our members swear to technical analysis. They go by this as a method to increase their bullion holdings. I've heard you on many times say we're dealing with completely rigged and distorted markets, and therefore technical analysis doesn't work. However, many of our members do think it works based on the fact that this is on historic data, that this technical analysis has been designed, and markets have always been rigged and always been manipulated. And also there is this idea that they measure the human psyche rather than something to do with precious metals. And finally, there is a sort of self-fulfilling prophecy that if the technical analysis predicts a crash or a rally, that people will jump into that side of the trade, and therefore it will fulfill itself. What are your comments on technical analysis?
Sure, and to the people asking this question, you have to realize, again, my background. I was on Wall Street for 15 to 20 years. I was a buy-side analyst. I was a buy-side trader. I was a sell-side analyst. And I've owned stocks and bonds for, well, actually no bonds, but I've owned stocks from forever until 2 years ago when I went fully into the physical metal market. And I'm pretty much an expert in all these areas, so I know all about technical analysis. I've written extensively about what I see in the precious metal markets and other things based on all that I've learned, which is probably a lot of the same things that you people know about. In recent years, probably the last 5 years or so, I've started to realize that precious metals is so manipulated that anything related to short-term technical analysis is useless. However, I was showing in my rants, for instance, long-term technical analysis, over a year or two, because you get these solid floors out there. In fact, the manipulation actually creates some of these massive floors and ceilings that can be used by technical analysts. But the fact is, what we've seen, I'd say really the last 2 years since gold hit the all-time high, but more so since this fall when they just went berserk, the short-term stuff has become useless. They are just attacking every single day, no matter what's going on. They cap every single day, for instance, at 1400. They, whether it's good news, bad news, they attack. So I don't even show technical analysis anymore. And if anyone wants to use it, there's been multiple major buying opportunities based on technical analysis in the past 6 months, and all it's caused has been massive collapses in the price. So, I'm not a big fan of it. Yes, it does relate to the human psyche. That's exactly what the cartel is preying on, as well as those stupid traders that have been losing for years, buying when they see technical breakouts and selling when they see technical collapses. So again, everyone, to each his own, but I think technical analysis of anything these days, whether it's bonds because of the QE, whether it's stocks because of the PPT and the propaganda average, I think it's become essentially useless in most cases. That's my opinion.
Thank you, Andy. Another question that was raised, and this relates to a recent podcast by Harry Dent, who supported your idea that we are dealing with a failed recovery, and since 2008 all we're seeing are the effects of money printing. But unlike you, Andy, he's predicting a significant deflationary period with a collapse of financial assets, including gold and silver. The reason he says is that although we are seeing inflation in some areas of the economy, we are seeing a significant deflation in other areas such as salaries and jobs and other parts of the market. In that situation, he's proposing cash to be king. You've partly answered this, but what are your comments to Harry Dent?
Okay, several things. By the way, for the people who listen to the Harry Dents of the world and the Larry Adelsons, these newsletter writers who just basically, destroy people with their trading calls, does anyone know what Harry Dent was famous for before his deflation call, that everything is deflation? He was famous for saying the Dow was going to go to like 35,000. Okay? He's just a quack. He goes from one big one big game to the next big game, and people always lose listening to him. I've written extensively, if you talk about deflation, I've written extensively about inflation and deflation. First of all, no one even gets the definition right. The definition of inflation is the printing of money. And yes, people say, well, yeah, the velocity is falling, so it's really deflation. The fact is, Google my rant, want versus need. Anything that you need in life has been going up in price. You name it. You need food. You need medical insurance. You need education for your children. You need just about any necessity in life, the price has gone up. But things that you want, whether it's a television or a car or a house, by the way, because you don't need to own a house, you can just rent one, they have gone down in price. And that's the nature of printing money. It goes right into the things that people need the most. And, of course, you get guys like him and Elliott Wave, Bob Proctor, who are constantly saying deflation, deflation, deflation is scary. But, by the way, if we're having this deflation, why is the Dow soaring to record highs? It's certainly not because of the economy. We have a record low labor participation rate. If you strip out the BS and the employment numbers, we have record low employment. We're near the Depression era levels. Europe is a complete disaster. I mean, Europe is far worse than we are, and their stock markets have gone up. Look at Japan. They just got the Dow with all this money, the Nikkei with the money printing to double. So I think he's just one of these guys whose job is to churn and get people to buy a newsletter, and they always have a call. But the fact is he's badly distorting the truth, and I have absolutely, utterly zero respect for people like that, and I've written about it extensively.
Thank you. The last question I've got, and then we can open it up to the floor, is you've sort of partly answered it, and that is regarding what type of metal you should buy and also what type of coin or bullion should you look at. And the last few months we've seen a significant hit in platinum, silver and gold, but palladium, for example, has really not taken much of a hit, probably because of its production issues. And we all know that Rick Rule has been supporting the idea of the PGM, and saying, well, that's a good option to invest in the short term. What do you think of that, Andy? And also, with regard to coins, what do you think of semi-numismatic coins? You did talk about numismatic coins, but what about the semis, the ones that you get from the Perth Mint, the Lunas, the Kookaburras, and the coins that have some limited supply, but can get at a bit over spot?
Okay, well, several questions here. Well, we'll start with platinum and palladium. Again, palladium, I mean, yes, platinum and palladium are in the precious metals group technically, as is rhodium. Heck, rhodium peaked at 5,000 10 years ago and is 1,000 now. So just because it's in the precious metals group, it doesn't mean it acts like one. To me, palladium is a pure industrial metal. Yes, they do make palladium coins. We do sell them, not too many of them. But I don't see anything other than catalytic converters. And as you said, the main reason that you buy them is these crazy supply issues. But let's face it, these supply issues have been around for years. I mean, South Africa is literally collapsing the industry, and the price of palladium hasn't done anything. It's been sitting around $600, $700, $800 forever. I would rather have palladium coins in a currency crisis than just about anything else, but I don't consider them much at all. Platinum's a little different because it has a history as jewelry, as being revered, as something people would want to own other than for industrial demand. But the fact is, there's not that much out there. It has no real history of being money, so I'm very leery about it. Recently, it actually has done very well. It's 1,500 right now, while gold is down under 1,400. And so I have a very lukewarm outlook view about platinum, although I do think it should play a small role in portfolios of physical precious metals. I talked about the types of coins. I don't think that going more than 1 ounce is really worthwhile. Maybe 10 ounces for silver, but not much more than that, because the key, you buy this stuff to preserve your wealth, and you may need it sometime, to barter. So I wouldn't want to go too high, and you don't want anyone worrying about is there going to be tungsten inside it with the big metals. So I focus on small things. I'm not a big fan of numismatics at all, because I think that it's, like I said, like baseball cards or paintings, it's very subjective what the value above the melt is. And at times they have very huge premiums, and at times they have very low premiums. And so you really have to be an expert and be willing to take losses even when gold and silver prices rise. So personally, I don't own them. The only time that I would own them is when the prices are low. For instance, I bought a bunch of these Canadian wood bison special maple leaf series when they came out because they were trading essentially around the value of maple leaves. To me, if you can get a numismatic at a price that's pretty close to bullion, well, then go for it. But it's not often you get a situation like that.
Okay. Good, thank you. I think we could open it up to the members if they want to ask any questions. Please use the hand up button, and Andy will unmute you.
Or you can chat if you'd like. Hit on the chatter question. I don't see anything. Oh wait, let me open my chat. Nope, nothing. Okay. Well, unless there's any other questions, again, this will be up on YouTube probably sometime early next week. I really, really appreciate you taking the time to listen to my presentation. And if you have any questions about precious metals, the markets themselves, about the actual bullion business, please give me a call or call our brokers, and we'll be happy to answer anything you have.